Welcome back to the Tech Talks Daily podcast, the show that connects you with the innovators and thought leaders shaping our digital world and the world of business. I'm your host, Neil C. Hughes, hoping to bring you insightful conversations with industry frontrunners. And in today's episode, we're turning our focus to the housing sector, an area where technology is increasingly playing a pivotal role. And you've probably seen trends around prop tech appearing more and more in your news feeds. And it is a pleasure to welcome Sipho Simela, founder and CEO of a company called Matrix Rental Solutions. And they are a New York-based company that's leveraging AI to revolutionize the rental housing process. And their mission is to aid 44 million households in the US that currently live in rental housing by providing them with an innovative solution to a persistent problem. And they've got an interesting AI-powered approach that helps to eliminate bias from rental screening procedures, creates a fairer and more equitable process for parties involved. And we'll also be diving into how technology can guard against housing discrimination, the importance of a universal rental association, and how the outdated tenant evaluation systems that are in place can hinder access to high quality and, most importantly, affordable housing. But enough from me. Buckle up and hold on tight as I beam your ears all the way to Connecticut, where Sipho is waiting to share his story. So a massive warm welcome to the show, Sipho. Can you tell the listeners a little about who you are and what you do?
Sure, Neil. Well, my name is Sipho Simela. I am the founder and CEO here at Matrix Rental Solutions. Here at Matrix, we are laser focused on the rental housing market. We've helped put more people into more homes faster by streamlining the rental application process. We've developed the universal rental application that sits alongside our ability to pay scoring. So helping people prove their ability to pay in a much faster time.
And I suspect that for most people listening everywhere in the world, when they think about housing rentals and that kind of industry, they probably don't automatically think about artificial intelligence or, in fact, any technology. So can you tell me a little bit more about how Matrix Rental Solutions is utilizing AI to automate the screening process for applicants and why this method is so much more effective than that traditional approach?
Yeah, absolutely. So, here in the US, there are about 44 million people that rent homes. We looked at credit scoring and the paper-based application as really being the way of the past. And the way going forward with so much access to technology, we went out and connected to over 16,000 banks, credit unions, financial institutions. We've connected to over 1 million employers through our payroll connectivity. And what that allows us to do is automate the data flow. Once we've been able to automate the data flow, how we measure and how we port that data, that's really what drives the AI portion of our product. So being able to give collective intelligence based on the fact that this data is automated and the data manages to move from place to place, really being able to use models as a way of doing things like digitizing documents, being able to utilize modeling as a way of predicting outcomes. That's been the really exciting part. We're just the tip of the spear right now, or tip of the iceberg. We see so much more as far as how we plan on utilizing AI on a go-forward basis, particularly as we start leaning into affordable housing.
And I think whenever anybody talks about AI, it's not too long before concerns start to arise and people start talking about things like bias. So I've got to ask, how do you help eliminate bias from tenant screening processes? And could you explain some examples of the biases that exist in the traditional analysis models too? Because again, that's something we don't hear about. We only hear about the bad side of AI. We don't hear about the good. It's pointless looking back through rose-tinted glasses because there's a lot of bad stuff there too, right?
Yeah, absolutely. When you look at the overall tenant screening process, Neil, I like to break it into two parts. There's the quantitative and then there's the qualitative. On the quantitative side, we're looking at assets, income, employment verifications. There's also this underbelly of qualitative data where it comes to things like criminal history, eviction history. These are things that are proverbial third rails. What we've found is that by segmenting the data and being able to put the consumer in the center of the transaction. And I'll explain in a minute what I mean by that, but putting the consumer in the center of the transaction and granting them the control. One of the things that we've noticed is that, with AI and modeling, when you start combining those two things, you start looking at pattern recognition. And pattern recognition has a way of taking on a mind of its own, particularly as you start thinking about the geofences that exist around certain places in this country, certain places across this world. And some of the outcomes that are driven by those models are less favorable for a lot of individuals. One thing that we looked at in our early innings, and we still pride as like the backbone of our product, is that ability to pay score. But the genesis of that came from data that we gleaned from credit scoring. Credit scoring has a way of skewing unfavorably, particularly to minorities, immigrants, younger people that don't have a longer credit history. But incidentally, that makes up almost 2/3 of the total addressable universe of who renters are. So, when I think about AI, I think about bias, I think about being able to put that consumer in the center, being able to enable accounts, proof the data, and then ultimately share it with the parties that they choose to. We're giving the consumer the ability to not be as subject to that bias.
And I remember when I first entered the property market, because if you've got a common name like I do, any search for a home or rental property when you don't have a credit history throws up all kinds of shady characters with less than ideal credit ratings, shall we say. So I've got to ask, how does your AI system paint a more complete picture of an applicant and equally flag erroneous data? Can you provide some specific examples just to bring what we're talking about to life here?
Yeah, absolutely. So the first is, with the way that we even assemble the credit model, we're looking at the user providing us with information like first name, last name, social security. Really, it's about 7 key pieces of information that try its hardest to be able to fence in, making sure that we're actually screening the appropriate applicant. The second is, and this is probably more of a property manager benefit, but it definitely helps consumers, it's the way that we look at fraud prevention. And so here at Matrix, we look at 3 kinds of fraud prevention. The first is document fraud. And so that's essentially a person handing in a fraudulent document. We look at the data on the document when we extract it. We look at the metadata inside of the document. We reconcile them. And there that produces our ability to detect fraud. The third kind, this is really more of, so the second kind, this is identity theft. And so when we look at, the idea that identity theft tends to be tied to, we look at lending data being 3 times more likely to default based on having identity theft show up in your profile. We flag this for property managers to give them an idea of this is where, there may be red flags around a particular candidate. We found that during the pandemic, especially when people were facing hard times, there was a massive increase of fraud in the single family, multifamily home rental space. And so by being able to flag and identify these, we're thinking we're putting additional barriers in place or additional tills in place to make sure that fraudulent applicants are not skating through the process. The third kind, and this is what I think is probably the most interesting and the most nuanced part of the fraud screening tools, this has to do with what's called synthetic fraud. Neil, synthetic fraud is something that was once relegated to banking, but cost banks billions of dollars. It's the idea that you could take one person's social security number, another person's first and last name, another person's address, and essentially cobble together a synthetic identity. The ability to defeat the models that usually go and pull and return credit, that's something that we're screening for and alerting property managers and landlords about in advance of the acceptance of the application. And so, I like to think that, our product is very balanced in the approach that we are getting to the heart of the ability to pay, but we're also helping owners and operators make better, faster decisions.
And one of the things that stood out to me when I was doing a little bit of research on you is that your data shows that 89% of applicants granted conditional acceptance made at least 3 consecutive on-time rental payments. So what are the implications of these findings for, let's say, property managers and indeed the wider rental market?
We think it's revolutionary because what we've proven now is that ability to pay scoring works, as opposed to just traditional credit scoring where there are these funnels that are put up where if you don't have a FICO credit score of X, you'll never even get through the funnel to be processed. What we've seen is that, because so many more Americans are measuring credit differently, so many more Americans are taking on different jobs, ability to pay matters. You can have a person that's recently come to the US with a thin file of credit, but making 5 times the monthly rent. That person should at least be granted the benefit of being screened and screened well. And that's where the ability to pay score helps. All we've done is round tripped and proven our data model. And what we've seen is that by measuring the on-time rental payments and looking at that history of payment go forward once the tenant has been screened and accepted, that's where we're finding that 89% of people are going on to make the rental payments. Our goal is to continue to surface this data to show that the credit scoring models don't tell the whole story of the financial profile of the rental market.
And our news feeds are dominated by negative tech stories. And so to restore the balance in the universe, can you elaborate on how technology can protect tenants, realtors and brokerages from housing discrimination cases? Because there's so much good can be done here.
Absolutely. I mean, I like to think of technology as a way of elevating people. It's a way of expanding your reach. I once heard something, where someone said, if you want to break into a market with technology, you have to be at least 100 times better than the incumbent that you're replacing. And what we did is we took what's a standard 3 to 5 business day process, and our median average processing time is 14 and a half minutes. So I think we're definitely skating along the right way there. But in terms of technology being able to protect people, I think it's all about transparency. For a person that goes and connects their bank account data, they're able to proof that data, and they know that this is in fact my data. It is in fact a true depiction of who I am, as opposed to some of that. I look at push and pull, right? Being able to pull data on a person, you don't necessarily know the efficacy or the solvency of that data set, whereby allowing people to present themselves to you and knowing that there are screening measures in place that validate the efficacy of that data. I think these are ways that technology can continue to enhance the reach of both the owners and operators and the tenants.
And I read before you came on here that you believe that there's also a need for a universal rental application. Can you explain what that entails and why you feel it's so important for the industry?
Yeah, absolutely. So when we built our universal rental application, it was built off of this idea of enabling access. We lent our framework from something that has completely changed the way that university admissions happen in the US. That's called Common App. Common App aggregated 9,000 undergraduate universities and colleges into a single application. One of the larger barriers was people paying these multiple non-refundable application fees to get into university. And if you look at the idea that, unfortunately, across this world, not everyone has the exact same amount of money, now you're kind of skewing the data sets of a person that may only be able to submit one application, probably reaching down to apply to a school that they know they can get into, as opposed to a person with maybe a little bit more that can apply to 3 or 4 universities and take a chance. And if you look at over time, the outcomes of, the link between where people went to university, the kind of jobs that they get and the kind of lives they end up living, the Common App story told itself. We see something very similar in the United States rental housing market and across the world. The idea that if we gathered all of the data into a single application framework, and for as long as that data remained fresh and relevant, being able to extend that same application out to as many units as it took that person, albeit one at a time, because you can really only live at one place at a given time. We put metrics in place to ensure that, we have a place for people to come to pay a single fee, but to ultimately be able to apply to multiple units. And this, I think, is very particularly relevant as it pertains to low to moderate income individuals. If this process is taking 3 to 5 business days and a person needs to really choose where they're going to live very, very carefully, it limits the number of applications that a person can get into. And housing is so highly correlated with outcomes in individuals that we just wanted to expand that set. So our universal application is an application that's good for 30 days.
And to help everyone listening understand the difference between the old way of doing things and this new way of doing things, how does the current outdated tenant evaluation system prevent qualified candidates from accessing high quality, affordable housing? Because again, you're solving a very real problem here, right?
When we think about the way that the process works today, it's a single application, many of which are paper-based. You still have people that are submitting applications in person. That in and of itself is very restrictive to people that work a full day and then ultimately need to wait till the weekend to submit applications. In terms of the digital process today, allows a person to submit documentation. Their credit is pulled, but it still requires a person on the other end to sit and go through what I call the pencil and ruler process of looking through those documents. And to make it even kind of more, to compound the problem, not knowing that the documents that they're looking at are actually valid. Fraudsters, they say, move at a pace just a foot faster than the people looking for them. And so, there's been so much evolution in the way that documents can be created, that how are you actually knowing that the data that you're looking at is from the person that says that they're giving it? And so that whole process of 3 to 5 days, especially in that low to moderate income space, people need to move. And so if you need to go through this process multiple times and you don't have the money to maybe send off 5 applications at a time, it becomes very challenging. But by having this universal application, limiting the fees, but raising the quality of the data, we think that we're solving a very real problem for both the owners and the residents.
And as we look towards the future, how do you envision the evolution of tenant screening processes, especially with the help of AI and other emerging technologies? Things are moving so fast at the moment, but how do you see this continuing to evolve?
I think things are going to get faster and more accurate. The idea of direct source data, I truly believe that the future of this industry is ability to pay scoring. One of the barriers to using ability to pay was how inaccessible the data was. But now that we're able to, in real time, create an income calculation, balance that off against asset summary, and now produce a full package of data in those 14 and a half minutes, it's so powerful because now you have residents that are able to verify that the information that is being given about them is actually true. But you're now putting the owners in a much more powerful position to be able to look at multi-factor data because it's readily available to them. We use what we call our Maya score. And so our Maya report, matrix asset and income analysis, is the report that gives them up-to-date analytics based on the data that we've pulled. And quite frankly, without the use of technology, it's a very difficult exercise to get done.
Well, I love looking at where we're going and the future that you're helping to shape here. And you have been on an incredible journey, enjoyed a fantastic career in technology. But I'm now going to ask you to look back in time, because none of us are able to achieve any amount of success without a little help along the way. So is there a particular person that you're grateful towards who maybe helped get you where you are today? Maybe they saw something in you, invested a little time, but who would that person be and why? Maybe we can give them a little shout out today.
It's like being asked to make the Oscar speech.
Yeah.
No, Neil, I'll tell you a little bit about myself more personally. I'm a first generation Zimbabwean immigrant. I've been blessed with a number of opportunities to get to where we are now, where I am now. But I wouldn't be here without my parents. Yeah. My parents came to this country in search of a better opportunity. They found their footing here in the US, and had they not, you think about what could have been, the outcome of my life could have been very different. And, when I talk about the passion of ability to pay scoring and the balance of affordable housing, I don't just speak about it from a pedestal. I speak of it because many of my family friends have lived these journeys in real time. And so when we think about, who's helped us, but more importantly, giving back, it's going to take a lot of people. It takes balance. It takes cooperation, collaboration. There's always something that I like to say. It's an African proverb that says, if you want to go fast, go alone. However, if you want to go far, go together. And what we're doing using technology, using AI, is helping you unify people with such an extended reach that has never been available in history. So we're excited about the future, and we're excited about demystifying technology and creating transparency, and hopefully, as we say, putting more people into more homes faster.
Absolutely love that. It's a beautiful moment to end on. But before I do let you go, for anybody listening just wanting to find out more information about Matrix Rental Solutions, maybe they want to contact you or your team, what's the best starting point for everything?
Yeah, absolutely. Please visit our website at www.mymatrixrent.com. There, people are able to learn more about our company, what we do, as well as contact us with questions. And, myself, my team, we're always excited to meet more people in the space. And even for those that aren't in the space and just want to learn more about the way it works, at some point or another, many of us have been renters. And even if you're an owner now, someone has probably written a rent check at one point or another. So I think that this is such an exciting topic because it affects so many people.
100% with you there. And we covered so much in a short amount of time there, from how technology can protect tenants, realtors, brokerages from housing discrimination cases, the need for standardization across the industry with a universal rental application. And more than anything, I love how humble you've remained throughout and your beautiful story around gratitude there. So just a big thank you for taking the time to come on here, share your story. I always say technology works best when it brings people together, and you seem to live and breathe that. So thanks for joining me today.
Thank you for having me on, Neil. I appreciate the opportunity.
And that brings us to the end of another episode of Tech Talks Daily. I'd like to extend a heartfelt thank you to Sipho for joining us today and shedding light on how Matrix Rental Solutions is able to leverage AI to create a fairer and more efficient rental process. And the work he's doing there is a reminder that technology has the power to break down barriers, foster equity and access across all sectors, including housing. And as we wrap up today, remember, tech's impact is far-reaching and we can radically change even the most traditional industries, improving lives, pushing us towards a fairer and more equitable society. You might say I'm a dreamer, but as John Lennon said, I'm not the only one. We see so much negativity around technology in our news feeds because, hey, that generates more clicks, that generates more interest for advertisers, etc. But the reason I invite people like Sipho onto the podcast today is to shine a light on some of the great work that people are doing here. So if you've got any questions about today's interview, email me, techblogwriter@outlook.com. Any questions or anything at all, DM me on Twitter, LinkedIn, Instagram, just at Neil C. Hughes. But that's it for me, I'm afraid. I'm signing off, so stay curious, stay informed, keep innovating. Thank you for listening, and until next time, don't be a stranger.